Good morning, everybody, and welcome to the Bookmap All Markets webinar. This is Bruce at Bookmap, and we'll be going through live order flow analysis. Uh, the really the goal of these webinars here is to really understand order flow, the traders within the market, within the auction process. And that's where order flow really shines. And what Bookmap does in the order flow is it will show you, it will display the limit buy and sell orders. So like, for example, here's the NASDAQ. Where is their supply? Where is their demand? It's here in the heat map here. Okay? These are the sellers up here at 21,620 or 21,624. Do buyers want to trade with these sellers? That's the question here. And the heat map, if for those of you looking at your level 2 or your dome or whatever it is, it answers the same question, except that when you're looking at your dome, this is similar to the dome here, this column here, the current order book. And these numbers here is liquidity. You can see we just map it though with a color and plot it on the chart historically. That's it. Right? But we can understand now the context here. These are where the buyers are down here. You can see that some buyers just popped into the book here, right? It's a constant changing environment in here, it's all about supply and demand, like any market. Look, see, there's more supply that hit through that liquidity. So next level of liquidity, the figure here, right? We can even take a position based off of these things. Now again, I should read the disclaimer here, but we'll trade into a cross. It's too late. I missed it. Let's see. I will not be able to activate a cross trading. Okay. That's okay. Let's see here. All right. Oh, back to retest it. Okay. Is there more supply? Let's see. Where's the demand? All right, there's some demand. Let's dump it off up here. Here's where the supply is. Okay, so these sellers met demand down here. These buyers, if there's enough, this is where the sellers are. Okay, and if we got it wrong, we got it wrong. But we're just playing supply and demand here and understanding this context. And then there's bigger context. There's a trend to the downside here, and we're looking at a counter trend trade in here. Again, understanding this supply and demand. Okay, this is going to be a stop run in here. We're going to go through. You can see it 22 right here, and flush through. So is there still supply in here? Nope, I'm seeing demand. Right. So let's see if now we get some interest to trade up to these sellers up here. Right, that's it. We're just looking at these really simple. It's just economics 101 and putting these pieces together, that's what we can do with order flow. If you guys are looking at volume profile, if you're looking at trend lines, horizontal lines, it doesn't matter. It's the same principles here. And see, look at the interest now, a little bit of front running there, right, of some supply there. Now we got filled. Okay, right there in front, we front ran it by one tick here, and that's it. So anyway, let's see, you've got total P&L here. Just that's by points. Anyway, guys, let's continue on and get into the presentation. But that's what we're going to go through. And we're going to go through it in some detail here. Okay. All right. So let's go back to this screen here. And I want to go through this. So Black Friday. So our deal ends tonight. Let me show you some of here's the information on the discount of the deals for the Black Friday. You can see it ends December 6th here. So you've got until end of the night here. 50% off 3 months of our premier package, Global Plus, and 50% off the data. So either NASDAQ or CME futures. It's up to you. So that's the deal. So grab it. If you want to try Bookmap, or if you have a monthly deal, you want to extend it into the 3 months, go for it. If you don't, if you already have data, for example, and you want to connect Bookmap to that data, then this is the deal to get here. 50% off or 60% off Global Plus for the first month. All right, now this one, we've got 2 deals going together for the last few days here. So this one will end next week, December 12th. Right, so here's the information for that. We've got more going on here next week. We've been really busy here, all sorts of stuff and events and some great things here. We have a futures trading competition. In fact, I've got the landing page for it here. Let me bring that up. If you're interested, you can use your phone, take a screenshot here, the QR code. It's next week, December 10 through the 12th. This is exclusive to paid Bookmap subscribers only. Okay, so go for the deals, get the deal here, and then partake in the competition. Become a better trader, and we've got a great community in here, and partake in the competition. So you will get access to Global Plus if you have global or digital. You'll also get access to data only for the competition, but you will get also free access. This is another caveat here, or caveat. It's a carrot here to join this competition. If you don't have the MBO bundle and you want to try it out, join the competition. We're going to give you free access to it, and we're going to cover that access here through all next week during our Pro Trader webinar series based off of the MBO data. So we've got great content, we've got the competition, and then we've got these deals on Bookmap. So give it a shot. Hope to see you in the competition, and gain that access into the MBO data, and check some things out. If you're not familiar with MBO, then we'll cover it in some detail, exactly what it is. All right, let's go over to the S&P. Let's take a look at that, and let me get to some of the questions here, any of you guys have. You just switched onto the MBO. Okay, there you go, Stephen. Yep. All right, let's see. And how are we doing over on YouTube? Wow, 50% off. Yep, that's it. Session flow. It's not with Rhythmic data. I think it's with Bookmap data. You'll have to go through. Oh boy, you'll have to go through the details there. I'm not sure. Anyway, if you haven't tried Bookmap data, it's awesome. I'm not, it's not just because I'm over here at Bookmap. I like it, but I've gotten really good feedback from a bunch of users. And you know why? Primarily, Rhythmic is excellent. Their data is excellent. The issue that we've had with Rhythmic is they've been so popular being used for their paper trading, for all of these different prop trading services, like Top Step Trader, Apex, or Bullnox, or Thunder, or whatever it is. All of these different services, they're primarily using Rhythmic data because of the paper trading. And what has happened due to that is it's kind of created some delays and some issues with the data. So try Bookmap data out, and there's a whole bunch of information on that as well. There's a landing page for that on. Here, I can look it up here for you. Book data. Yeah, it's here. Bookmap data CME. right? So we are the data provider, and very, very competitive compared to the others. Anyway, guys, let's continue on, and this is what I want to cover in this webinar here. Is let's go through kind of an extension of our Bookmap Academy meeting last night. So the Bookmap Academy meeting, we went through a bunch of different things. I mean, we always do. But one of the elements was kind of understanding supply and demand, and some of these moves in here, looking for pullbacks. Okay, and we kind of primarily looked at these pullback moves. It did it here, for example. Okay, I mean, it does it all the time. In fact, I want to go into more detail though on some of these moves in here, because you can see it actually did it here, right here on this pullback in the ES, into where. Okay, this is where you can put this together into a trading plan. We can go and back test this in the next 5 minutes, and just to give you an idea of how powerful this is as a concept, then this would be a starting point for your trading plan. And the beauty of it as well is that you're going with the trend. Typically it is a pullback, but it could also be a range bound trade. Anyway, you get the best of both. So this is where there was big supply here. The buyers trade into it and through it here. And now this was at 9:47 East Coast time. And where did we go? I mean, you just look, we can't make this stuff up. Now here, we would anticipate actually a pullback after trading into this supply. We didn't, because we found more buyers. Now 116, 246, 69, and 231 are stop orders transacting. So a lot of people getting stopped out up in these areas up in here. We'll talk about that in just a minute. However, we're finding tons of buyers. Okay, some of these buyers are exiting the market. They are covering. They're not entering. So a lot are entering though too. And this is where we come back up and trade. Okay, we trade to the next level of high liquidity here at this 61.0 or 61.10. A little bit through it, and then let's imagine we're going to get a pullback back down to support. Okay, now support would be down here, the swing, but this would be demand here in the heat map right here. Okay, again, you just can't make this stuff up, right? This is just how markets work, all markets. These are where buyers are. Sellers met the buyers. Buyers met the sellers again and again and again. So this breakout established a new trading range in here. Okay, from here on up to here. And this is where you can look for your pullbacks here to where they broke out from, and a retest back to these buyers in here. Right? Here, this concept right here. Let me just, I really want to cover this in detail because it's so simple. We can just go up to here. I like this one here. Anyway, so here's our pullback to here. Okay, look at this little one down here. They're all over the place. Here's our breakout. This is our range. Here's our pullback, and here's our continuation. Here is our little range in here. Here's our pullback. Okay, back up to here. Okay, here's another pullback in here. Here's another pullback in here. Okay, so there's all sorts of reasons why this happens in terms of the order flow and the behavior from the participants. Here's one on the sell side. Okay, here's the pullback here. Now this failed here. You see the sellers come in, and in this case it came back up into here, and we just found more buyers back up above that area. When you see this in here, this can actually lead to a powerful move. A lot of people need to flip out of the market, and you can see that right here. Why? There's our stop run, 480.84 on the way up. So all of these sellers here are these buyers here. Okay, so anyway, just again, we're just going to talk about the understanding this concept and then also backtesting it just by going through the chart in here, and then we'll live forward test it as well. Okay. Now, one of the things that we covered in the Academy meeting last night was looking at these levels in here, but we talked mostly about the aggressors that are doing this in here, the aggressive market buy and sell orders. And let me tone down the do a little filter on stops and icebergs. A little too many in here. I'll just use the automatic threshold here, and we'll bring down that multiplier a little. Does that look? Let's bring down the multiplier more. That filters out quite a bit. Okay. And then we'll do the same here for, so this, you can see the stop runs here. They have to be 140, or I'm sorry, the icebergs have to be 140 or greater, which is, that's going to filter out quite a bit. Anyway, you can see how this is how you can do it. You can also put in the numbers in here, though, or the amount of time you want it to check out here. So that made it down to 186, or made it go up actually. Okay, that's fine. Let's continue on, and we'll do the same here. Stops, automatic threshold, 60 minutes. Let's bring this down. Actually, let's make it 30. So over a 30-minute period here, stops that are 18 or greater will show up. All right. Okay, great. So that filtered out quite a bit. Okay. And then that is translated over here. You can see there's a kind of a transparency of previous ones in here as well. All right, let's bring up that heat map. Okay, so we talked about this idea of pullback here in terms of the aggressor, and it kind of gnawed at me last night. It's like, yeah, that's good. However, it's only a part of the picture here. You're missing the heat map. We didn't cover it in detail. We talked about it, but when you put these together, this is where you really see the benefit here, especially from Bookmap, and you have a stronger trading plan. Is look for some demand in here. Look for like a book flip or something. So they were on the offer here with their supply, and then they turned into demand on the bid after it traded through this area. So we don't really see that here. We just get the pullback to check this little area here, and we found very few sellers. So we found buyers back up here. We get the move back up above. Okay, so there's our pullback. Here's our pullback here, and we see actually a little more demand in here. It's kind of faint, but you can see it here, heat map. And then that one worked out pretty nicely too. All right, so let's go to the current market, and let's take a look at yeah, I actually have something kind of interesting to show you guys as well about supply and demand. We've talked about it so many times in the past, but in terms of understanding it with the non-farm payroll here yeah, we just put it to the test here with some orders, so that it will really solidify the concept or the idea. So yeah, let's go over that actually, and we'll zoom in a little bit here. Okay. And what did we do? Okay. In fact, I'm going to have to adjust the heat map a little bit here. Yeah, there we go. So this is the default heat map. Okay, so here's what I did. Okay, non-farm is coming up. Look at the liquidity pull in here. There was tons of liquidity over in these areas in here. As the 8:30 data release approaches here, they're pulling that liquidity from the order book. Okay? All of these players are, most of them. There's some that are staying in the book. Okay, these guys in here kind of stayed in the book. These guys up in here, they stayed in the book. Okay, let's zoom in. And these guys down here also, they stayed in the order book here, right? Okay, where did price go? Okay, well, after the number, 830, price came down, traded into this, traded a bit through it. And this is happening really quickly. These are seconds here. Okay, so a couple seconds between each vertical dotted line. And then where did we go back up to? Here. Okay, and then where did we trade again? Here. Why? And why do we pull back after these areas in here? Because that's where the liquidity is. Okay? Now, I'm not advocating that you turn this into a strategy, but you could if you wanted to. And you know, you have to put on the risk, and the risk could be substantial. But it just demonstrates in here how markets work. It's supply and demand. Okay, so you know, and you know, this turned into some winning trades due to that activity here. All right, let me see if there's any questions on that. Oh, you want me to explain? Good morning, Rob. Toxic order flow? Yeah, sure. So toxic order flow. Well, first off, let me take a look at. Ooh, okay, we got a lot of questions over in YouTube. All right, a lot of action. Love it. You're welcome, Session Flow. Appreciate it. So yeah, we've got a great team over here. We've got a great academy. I mean, look at Alois and we've got you know, we got Rob, we got Alan, we've got Steven over here helping you out as the demo trader in here and answering your questions. It's a great team, and yep, a lot of great streamers. We had Tom B on our stream last night for the Bookmap Academy. So the winner of the blue jacket got access to 1 hour of free time Q&A with Tom. So yeah, all sorts of things. I don't want to overburden you guys with all these different campaigns that we have going on, but we do these all the time. It's just what we do here in terms of our campaigns and our community. All right. So, what's the best way to begin learning Bookmap? Nate, this is exactly why I want to go over this, so you can understand. Okay, Questomondo, you upgraded to Global Plus. Okay, excellent. Okay, yeah, the CME. Well, it depends on you. You might be using Bookmap data. I'm not sure. You go to your you know, your data connections up here, and you know, see, are you connected to Bookmap data up here or Rhythmic? You see, I'm connected to both, and I'm also connected to a Rhythmic. Oh, I named it here, my Rhythmic paper trading. I'm connected to our trading simulator as well for the competition coming up. So anyway, so Nate, this is it. Like, let's just so I just covered like you know, understanding supply and demand here at one of the most volatile events we have in the market, and it still works. I mean, it kind of has to. It really kind of has to. Now, again, you have to. One of the things, the most important thing that we do as traders, well, first is we have to have an edge. So you have to understand and study this. Do you have an edge? Go through many examples, just like we did earlier, Nate. So if you like this idea of pullbacks, okay, like here's the breakout, look for a pullback. Okay, well, let's put a line right there. Did it pull back to here? Let's take a look. You know, or did it come back into, you know, Was there more supply that took it down to one of these levels down here? Okay, so ideas of support and resistance, but we're going to be talking about them in terms of supply and demand. Okay, so let's see here. Well, we never even came back to these areas here, right? So we don't, there's nothing to cover there. There was way too much demand, so we never came back. But that's what we'd mark up, and you'd look for it, right? Instead, this idea of pullback actually happened at a higher level. It happened here. Okay, here's the move up. Here's the pullbacks. Here's another move up. Here are the pullbacks into those areas here, and we trend higher here. It starts to turn into a bit of a range bound trade here. It goes down below the pullback here, okay, and then we find some buyers, okay, and then that led to a nicer move to the upside here. Anyway, that was within the first minute, as you guys can see, of non-farm, right? You can zoom out though. It doesn't. You don't have to look at very low time frames for this to understand this concept. Okay, yeah, we'll go through it again and again and again, Nate. So just start to figure out and just keep it simple. I mean, we're all just inundated with all these ideas on trading, and someone's looking at this and Fibonacci that and averages and all these things. If you gravitate toward some of those trading strategies, that's great. Do it. Make sure that you comprehend it. Make sure that you've gone back and you've made it your own. That's really the key, and that's a good starting point. Where we're going to go with the order flow is now you can enhance that strategy tremendously by looking at the supply and demand. Okay, or you can even just start with supply and demand, and that's enough. It's really up to you. Let's mark it up right now. So we are in this range in here, and this is where we covered it earlier, right? We went a little bit lower, but we'll mark it up from here. Okay, so this is where we are, and this is where we're watching the auction between that area in here. Now let's just cover this here. We're going to look at it very, very differently in here than like all the trading books out there. What I want to go through is understand this a little more like kind of auction market theory, but and volume profile. But we'll look at a profile or two, but like we're not going to cover too much of that. We're going to cover supply and demand. Okay, that's not in here. These are transactions. Supply and demand is here in the heat map. Okay, these are where the sellers are. These are where the buyers are. Okay, now it just so happens it's between a beautiful single distribution here. Okay, so what that means is down here, there's not a whole lot of traders, buyers or sellers. Okay, up here, there's not a whole lot of traders up here either. So we are up in here basically in the auction. Okay, this auction here. In this auction up here, this is overpriced. Okay, this is underpriced, and buyers and sellers are telling us that. Okay, well, what about supply and demand? That's where we want to really key in. How are the buyers and sellers telling us that? Okay, well, here's trade into high liquidity, and it bounces out. Okay, it trades up into this liquidity here. Does not trade further, okay, this time. But it traded into some liquidity up in here, and this is kind of the edge of the range up here. Okay, now we don't know, right? It's kind of a rough edge in here. There's a high here, there's a little bit lower here, a little bit lower here. Okay, so what about down in here? Well, here was a swing here, a little bit higher, a little bit lower, a little bit higher, a little bit higher. Okay, so we don't really know where price is going to go exactly. But once we start to get into these levels in here, or we see some sort of skew in the auction in the current market, then you have something to shoot for. Okay, so let's take a look at the current auction right now. Okay, well, here we see sellers come in. Here's our pullback on the micro time frame, smaller time frame, and we got a cluster of sellers in here. Now the sellers have not tested these areas here, right? So let's see if they do. Okay, now I'm not going to take a position on this, but I'm looking for the sellers to, yeah, let's just do it. We'll take a, I'll use the bracketed orders. This is a horrible entry, right at the bottom of this range in here, and you can get trapped so easily, right? But we're just looking for a move down to here, right? And this liquidity here. Okay, now just to demo the process, right? Where is there the liquidity? Well, it's here. Okay, well, heck, it's also down here. So maybe we'll even move it down to there. And we need to see now for this move to unfold, right? This is our auction. This is our range, our statistical range in here. We need to see a lot of sellers come in. Okay, and do we? Yeah, it's not bad. It's not bad. These sellers need to move it away from this area in here and explore areas down here. Okay. Now, what does that look like? Okay, well, we're going to look at it in the current market, but we can look in the historical market too, and that's where we actually should start. That's how you can put these ideas into a trading plan. Okay, so now we're looking for more sellers down here. Okay, at the bottom edge here. Okay, do we see sellers down here? Okay, we see sellers in here, and we see very little selling here right now. And we see buyers took it back up to this little range in here. Okay, now we see sellers taking it right back down. All right, let's see, do we get sellers at the bottom edge here at this 06 area? That's what we need to see. If we get a lot of sellers down here, then it will look pretty probable that it will break and probably trade down into this 04 area here. Okay. Now you can see what happened here, right? Well, we originally were getting quite the opposite, and this is why I was saying, first off, I didn't want to take this trade, and then we moved it away. Now the probabilities after I move this away from here and moved it down here, it's a lot less likely to unfold. Okay, we do see some sellers here, and then what happened here? We didn't find sellers. We found buyers back here, and they tested back up into here. They are likely to test here now, and here, and here. Okay, 609 and a half, 610, 610 and a half, 6110 and a half. So anyway, yeah, let's just flatten this here because this was a dumb idea. Just to demo it though, but this is what I wanted to cover, Nate, was to understand this, that this range in here, this is the auction. Okay, this is the value area. This is what it's no different than the price of oil, or if you go to the supermarket and it's the price of or the farmer's market, the price of tomatoes or potatoes or whatever it is. It's kind of a range in there, right? Maybe one week it's more than another, but there's a range, right? Now, if there's more supply, a lot more supply, then likely, you're not going to find enough demand. So what's going to happen? The price is going to go down. Okay, so and we're understanding this little range in here and putting these pieces together. Okay, so this in here is a very unlikely trade, okay, for this to work out. So I was just looking for it to trade to this area here, and it did. Okay, so that was fine. It did what we were looking for. And I don't know if I probably wouldn't have gotten filled there. There's not enough orders there. But that's where we were looking at getting out. And it was just a few ticks. Right. Anyway, I think, does that help, Nate, understand that? We'll go through many more examples. Now we'll look at the same thing here in the top edge here. Okay, we just traded into supply. Okay. Now, how did we do this? What happened in the auction here? And this is where we can get into some of the details in here. Okay. Well, actually, as price is coming up, these guys wanted to trade. Look at this. This is interesting. The liquidity in here picked up. Okay. So up here, there was 179 orders here at this 610 level, right? 179. Well, it boosted up to 224 at 610. Okay, and it became this yellow color. So we traded into it. Buyers took them on. This is what it looks like when we zoom in here. Buyers took them on and traded right into it. Okay, so now what has happened after that? Well, we got a pullback here. Just back down to the bottom of this little range here. Okay, now let's see if we can get a pullback to here, right? And look at the auction in here on the bid. See how they're bidding up in these areas here? So this is again, remember we talked about that earlier, that looking for a pullback into this area here where it broke out from. Now, Alan, you'd asked what toxic order flow is. We'll come back and revisit this in a second here, but let's cover that. I think this is maybe a bit toxic in here on this breakout here and this stop run here. What I mean by toxic order flow, it's a term in the industry. How do I identify stacked imbalances? And that's an easy one. Big deals. So you'll just see it in the order book here, right? You'll see the we're almost there. Hold on. Like this is pretty stacked up here, right? Pretty stacked. Okay, that's a lot of supply in here, and we didn't find enough demand interested. Okay, now look where we are. We're back to where we broke out from here. So now, do we find interest in here? Okay, in this little area in here, or is there more supply? Got a little demand here by the aggressors. Let's see, we get enough. Yeah. All right. So let's see if we can take a shot at this, and then I'm just looking for it. I'm looking for it to trade just up to here now. The same concept, same idea that we just covered. This is where we found supply. This is where we are looking for a retest back into that area. Now we might not get it, right? But that's the idea here. Okay? And we are in an uptrend, and we saw this demand in here. And let's see. And again, looking at this in a very different way, this is not some sort of math problem. This is a statistical or probabilities problem. Okay? This is not exact science whatsoever. Okay? In fact, we can stack the orders here. We're a buyer here, but we should probably be buyers down in these areas, down in here, right? Where there's more buyers here. Okay, see how they're starting to pull there? So I'm going to be a buyer here. I'm going to be a buyer here and here. Maybe even down here at this area. And there we go. Now we're playing more of the statistics here. If it's outside of this value area in here and it trades into these areas, I want to be a buyer. I want it to return back into this area here or trade to the other side of that range. All right, back to toxic order flow. Well, one of the things, just to understand the terminology, The retail traders out there, we are considered in the industry as non-toxic order flow. That's what we're called. Okay. So when other traders see non-toxic order flow, then it's a go. It's a green light. Okay. Toxic order flow is what everyone does not want to get caught up in. And you get something like some sort of move that moves the market away from an area, and then and you get that support again and again, or that the trader continues to defend the position. Let's take a look in here where there might be some examples. Maybe we can find it better in the NQ here. Yeah, I think the NQ might be better. Here's an example up in here. This is now I'm not the expert in here on writing algos and saying like, yeah, this is clearly an algo. To me, yes, it is. And you can see a little bit of a battle here between another algo potentially, but this is what I'm talking about. This is our range here, right? This is where someone came in and hit the bid hard and moved it away from that area. And now it kind of slid back up to here again, but you can see kind of a bit maybe of a toxic move in here as well. And if we pull that across, you can see that's probably where we tested, and it is. Okay, here again, right? Starting to note like these big moves, these swings, moving away from these areas in here. Okay, that's why we're getting some of these retests in these areas as well. Okay, it kind of floats back up in here, and then you find sellers again. Kind of floats back up in here, you find the sellers again. Okay, start to look, Alan. Start to look for these moves, especially in the NQ. It's a good one. Here. And these traders are in control of the market during these time frames. Okay, and can you see it? Can you understand what I'm talking about? Oh, it's trading, absolutely. It's just it's well, yeah, it's do a search for it. Toxic means that it is not it's kind of manipulative, basically. All right. Okay, now there's a difference between toxic order flow and a stop run too. Here's a stop run, right? Now this is different here. This is capitulation. It's not. It could be, there could be toxic order flow in here, but then what we would get is a move back to here, and then sellers come right back in again, right? No, there's a difference here, and just look at your stops in Bookmap. 71 in there. Now this might be the a bit more toxic in here, right? And then kind of moving it away from this little area in here, and it turns everybody onto the direction here, and we're going back up. So, and you'll see this behavior in here all the time, Alan, especially like I said in the NQ, gold, also crude. The thinner markets, you can see it better, but it's moving it away quickly from an area. Okay? And it basically becomes a trapped volume back up in these other areas in here, and then you'll see if other traders start to go in this direction or not. No, short squeeze is something different. No, that's traders like ourselves getting squeezed out of the market, or could be larger players as well. But a toxic move is something that if you go back and even look at your candlestick charts here, you'll see it like maybe this move in here. that just pumped the market back up above this area. Now this is the new auction up in here, or the gap up in here, right? Look at this move in here, right? And this move down into here on the daily chart. Okay, same ideas. Here's kind of a toxic move right here. It was kind of going back and forth in here, and then like boom, right? Comes back, retests it, can't go back up above. Well, actually it does for a little bit, fails, and then tries again in here, and then slammed on again. Okay. Can they ignite stops? Absolutely, absolutely. Okay, but that's different than this here. This is capitulation at the bottom of the range in here. Okay, so look here, buyers coming back in, still supporting this. Okay, well, if that's the case, then I want to be a buyer, right? And I'll be a seller at the top of the range. I will also be a buyer here. Okay, here where these guys initiated that move here. Maybe you're thinking about it too much, Alan. But start to notice this behavior in here, these quick moves like this, and it totally shifts the auction, right? And now it just chops around in this area in here. Ask Maxime. Yeah. I mean, like, well, you'll see it, Alan. Just continue to look for it. And there's been many days where we've seen it unfold again and again. And in fact, we'll notice the behavior many times that the same player comes in and does these. That's their MO, for that day. Yeah, we'll continue to go over it. Okay, and yeah, I mean, here, I partook in it up here. Horrible entry. Look for that pullback in here. Much better, right? And still, it still turns into well, so far so good. Now this looks pretty toxic too, right? Okay, moving that market. So I'm going to move up here. All of a sudden I see a ton of buyers coming in here. Okay, now it's back and forth in here. A ton of sellers as well. Okay, so we got some volatility in here now. Okay, so it looks like sellers coming in. Okay, so we got stopped out on that one. But here, I want to be a buyer here at that liquidity. All right, let's see if we get our buyers in here now. In fact, I'm going to be a buyer back up above this right here. If we can get in here, Okay, here we go. All right, let's see if these buyers can now lift it away from this area here. Not yet. Okay. I mean, look, these are kind of just taking pot shots at it here. The bigger picture in here, as we talked about in terms of ranges, is we can look at the bigger ranges actually here, and our stops are right there. So I'm going to move them down to here. Okay, and let's see if we can. There's a lot of selling in here. This was extremely toxic in here. Buyers tried, and then we moved our target up, and and the sellers came in and hammered it. Okay, I'm going to be a buyer here as well. Okay, here comes some buyers. Again, same idea in here, and this is happening pretty fast in here. I want to be a buyer here. Okay, so we just added into this. And we're just going to wait. Okay, now here, let's see if we does this turn into range bound trade in here? Let's take a look here. Here's our demand in here. Okay, at 600, and then our supply is up here. The majority of it up here. So let's be a seller up here. Okay, so now the auction's changing a little bit. You can see the sellers in here at 10, but lower. Okay, I'm a little uncomfortable in this one, to be honest. Here's why. This is the time of day that we want to be really careful. We didn't see that reversal yet around this time, so we're starting to get it now. Yeah, not too comfortable demoing this concept at this time. But still, let's see if we can get some of these buyers to come in here in these areas here. We do have the profile here. We do have a lot of low volume nodes in here, or just a lot. This is where after the data, or I'm sorry, after the cash open, we see a lot of buyers move the market away, and then you get your double distribution, or a lot of traders here in an area, and then a lot of traders here in an area, and this area in here is thin. Okay, and we may come back down and retest into this area in here, see if we can find some demand down there. In fact, I kind of like this idea of maybe going at the bottom of the range in here. All right. Okay, now let's look at the bigger picture too. I put 2 on here as a target, but maybe we come back up into kind of the most traded level up in here. Should be kind of up here, and then we've got one we can use as a runner, maybe up here at 700. Again, guys, this is as I said in the beginning here with the disclaimer. This is not a trading strategy. This is just starting to understand some of these things with supply and demand, and then how to as a starting point for your studies. We go through this stuff all the time, and put it into a cohesive plan though for yourself. And what I mean by that is, let me show you here over at the Bookmap Academy. The Academy's free. It's open to all. We just had our meeting last night. Let me show you though what I mean. Okay, so find an example. There's so many examples in here. Yeah, one after another. So here we got Vinny, fantastic content. Look, this is what I'm talking about, is take some of the ideas, then here he's got it's actually is an update on his risk reward ratio. Here's his checklist. He's looking for iceberg support, CVD, VPI as a signal here. He's looking for passive orders being absorbed. He's looking for these things. He put it into a plan. Then he's looking for his target and reaching it. Here he's trading fib levels. Okay, and he grabbed 33 points out of it from this NASDAQ trade. Okay, so this is what I'm talking about. This is when you put it into a cohesive plan, and this is what we're teaching you at the Academy. Okay, to go through it, put it into a plan, get your checklist going here. DNT, did you get your checklist? Yes, you did. Excellent. Excellent. Love it. DNT Matter is it's got his checklist over here, right? That he is his custom checklist he put together. And now he's marking up the charts for here and then looking for these things to unfold. Okay, great stuff. All right, so all right, so you know, we're back up into, okay, so we kind of drew out this range in here, and we tested the bottom of this range, kind of. We didn't even, I'm surprised it didn't go, it kind of went, almost went to it, the bottom of the swings in here, and we already found buyers. Okay, so in fact, I got all sorts of stuff going on in here. Let me get rid of these. Yeah, I've got some things all kind of messed up in here. Let me actually cancel all of these orders here, and then we'll put one back in. It would have hit our target there. We can just take one off there. So we still got one on, and that will be our runner. Okay, and then we can look for 650, and if it comes up here and we see just tons of buying up above 6 or near 650, we'll move it up to 675 or 700. That might be a little much to ask, but maybe not. Maybe not. Again, looking at some of these ranges in here, you know, understanding this is how much price moved, right? And in fact, all of these moves look rather similar. So we could have, if we found enough sellers, we could have come back down and traded into this range, which is equal in length, you know, height here, of these ranges in here. And we still may, and fill this in, and maybe it becomes one big distribution. Or we may get another distribution back up into here. So for example, let's just take a measured move in here, and this is again understanding kind of pressures in the market. And that's what measured moves for me are good for. 700 looks pretty good. If we get enough buyers in here, okay, then let's move our target back up there. Okay. We're at all-time highs. We just had a flush through here. We just had our toxic move flush through a bunch of stops in here. Okay, you can see them in here. And 247, 82, 22, 96, and now we're finding buyers, right? So what did we do? Well, okay, we got in at a horrible area, I think. Here, this is our initial move here. Then another one here, here, and here. Just front running that high liquidity on the way down here. And then looking for we're buying though within the bottom of this range in here, and then looking for a move back up into the range. We took some off, and we're holding for the other side of the range, or actually we're holding for a continuation move into a new range up in here. I hope this, does this sound too complex? We'll go through it again. We can simplify it. But we're just talking, I mean, you know, supply and demand in here. Oh, thanks, Luis. Yeah. I mean, here, let's go through more examples in the live market. You know, it's then you can kind of see it unfold in the live market. But what you should do though is use replay mode in Bookmap, and then set orders in replay mode as well, and then demo this for yourself, and just go back and take a look at these things. Does it work? Right? Do you see this happen often? Okay, you probably will gain something from it. Okay, it's really no different than, you know, we've read all the books about candlestick patterns. It's the same idea. Oh, well, this is, you know, an engulfing pattern or whatever. Like, why does it work though? It's really the auction and the traders behind it and their behavior. That's what it really is. You know, we want to it's kind of, it's such a derivative, and it's so removed, I feel, that, you know, you try to understand these candlesticks. Are you kidding me? Are you kidding me? Like, what a joke. Like, who cares? what the candle does. You know, you want to understand like the traders behind the candles in here, right? And it really is, candlestick patterns are supply and demand. Trying to understand the behavior in here. It's so removed though, and it's already like, here's a day activity. Actually, the day period I don't mind too much in a candlestick. Some of these other candlesticks on lower time frames I do not like, because it's not a session. Who cares about a specific time frame? But anyway, and then we're making speculative bets off of a candlestick pattern. Wow. I mean, because we read it in a book, it just doesn't make much sense to me. It makes so much more clarity for me to understand, at least for me, to understand where the traders are transacting and where they want to transact. Where are they buyers on the bid? Where are they on the offer? Right. Okay, so let's go through the big deal. Other guys, Nate. Let's go through it again. Here we just traded down below our little level. Now this is NASDAQ here, so you know this is probably going to work better for us than the S&P, just because of the volatility. We'll have more examples in here. Now we traded back down to this swing here, but we don't see a whole lot of liquidity down here, right? Some, and it traded, and yet we still see aggressive buyers coming back in. Okay, so yeah, it seems to be some buyers down in these areas in here, and you know, likely we'll trade back up to the top of the range here. Okay, so let's see if we can get the move up into here at 21,627. Okay, so here's even a little micro range in here, right? Same idea though. Bottom of the range, back to the top, and let's see if we can actually now get a breakout on big buyers to trade up to 27. Okay, there they go. All right, now we just traded into high liquidity here. I anticipate a pullback. I anticipate the pullback to here. Okay, we got it basically. The next one, if there are more sellers, the next pullback would be into here. Now it's done at once, but I see high liquidity here at 620. So here, let's try to. You're welcome, big deal. Let's also. I hope you guys aren't. Please do not trade along with this. It's only a starting point for the getting to the academy stuff, and marking up your charts, looking at very specific things, having your checklist. Okay, and that's how you do it. Like think about it. Like oh God, what I had an example and I forgot it. Example of okay, let's suppose you're playing basketball. And you know, it could be tennis, it could be any sport really, but let's just stick with basketball. And you see a great move, right? That a player did, and it's like, wow, that was really great. I really appreciated that. I like it. That's the first thing. You liked it, right? Now you want to emulate it. Okay, well, try it. You have to practice it. You have to make it your own. You think that you, just because like you see a professional NBA player or college player make that move, that you can just jump into actually, and this is the analogy is spot on. You're going to jump into an NBA game and practice that move on pros. Wow, that's just foolish as can be. You know, so now where I'm going with this analogy in here, here's another pretty toxic move, Alan. Pretty nice, pretty nice move into this low liquidity here. See, this is where it really screws with our head. We're looking for that move into 27 and maybe above, and we got it. And look at this. So anyway, let's continue on with that analogy. It's really important. I firmly believe in it. So you like that basketball move. Well, what's the next step? You understood it now, you've watched it, you've seen it. Now you probably at home in your living room during the game, maybe you'll try it out. You'll say like, okay, how did he do that? Like a pivot, or let's suppose a spin move. Spin move is a great example. How did he do it? How did he come in, hit the defender, spin, and then spin toward the basket and then do a layup, right? Okay, you probably go through the moves like almost like a dance move in your living room and see, okay, can I do that? All right. Now, then the next thing is, you're probably after the game is, maybe with some friends, you go to the basketball court and you start to try it out, on your own, maybe with a friend, and see if you can, make that move work for yourself. You can see the analogy here. This is the same. Oh, we're still in that one position here. Wow, it retested all the way back down here. Look at that. And is that a buy in here? Well, we'll see. Do we have high liquidity in here? Anyway, so now let's continue on with that analogy. So you're not going to trade. So just don't jump into trading. It's like, oh, he's doing this. So he's looking at a moving average, and it's a pullback to a moving average, or whatever, or it's a fib level. Don't just jump in. Go practice it. You've got to make it your own. Okay? Then once you've practiced it and you have multiple examples, okay, your likelihood of being successful with it now is much higher. Okay? And you still might not be successful with it, okay, for a number of reasons. Maybe it's psychological. Maybe you can't pull off the move in the live market when you do it. But at least you have numbers. You've tried it out. You've back tested it yourself. You've looked at it. You've played around with it. Maybe you've replayed it in Bookmap's replay mode is awesome for this. It's awesome. So you can replay it. You can back up the tape, replay it again, back it up, replay it again, and get good at that move. Now you're becoming much better. Okay, now you can probably forward test it in sim in the live market, and then get good at it again. You're working on your move, and then the next step, forward test it in small size. Work with micros. Okay, now that's a whole far cry away from reading a trading book or watching a webinar and then saying, oh, he's doing this, and then just jumping in and trading. It's crazy. I mean, you wouldn't do that, even with the this basketball spin move, or it might be in tennis, or might be in baseball, or whatever it is. You just wouldn't do that. So you got to go. It's the same process. I don't know. Let's see. Did I get a reaction off of that? I hope it was a good one. Let me get to the comments here. All right. Yeah, hold on a minute. Yeah. Oh, well, this is exactly what LeBron, I mean, he went from high school into the pros, and he's a special case. But Jordan, oh my God, like he and his brother, or I forget who it was. They practice all the time, all the time. These moves, and and then he was super competitive as well. It's a whole different game. Okay, yeah, JJ. All right. So I really like this analogy, because this is how we would do it in real life. So how would we do it in with trading? You know, something similar. All right. So we here. Let's take a look. How's our auction looking now? Okay. So now we traded back down to the bottom of the range. Okay, and we're still finding sellers. Now we just traded into some high liquidity. Okay? This is what we want to ascertain. Okay? Supply or demand, demand, demand. Wow. Okay, even more. Okay, so this is really flushing through. Okay, now let's look for that. There's our big stop run here, actually. Okay, now if I see buyers back up above, I will trade it back into the range in here. Let's give it a shot here, because I know there's buyers here, and I know there's a lot of stops that were just triggered. Okay, so now I'm looking for buyers, and I don't see them yet, right? I'm looking for them in here, and I kind of, maybe got ahead of it here. Okay, let's see if we get them now. Okay, big green dots is what we're looking for, and above this area here. Here we go. All right, so now where are they going to take it? Well, up here is not a bad area. This is where it dropped from, right here. Okay, putting it into practice. Now we won't get, we averaged into a loser here, and we're just looking for the move back up into, yeah, here I think is probably pretty good. Okay, this also is a pretty good area here, right? I'm thinking we're going to probably come back up into the range though after a big flush through like that. Okay, so and then if we do, then where else? Well, look at the price action in here. It's great stuff in the Nasdaq here. This little ledge in here, it broke, traded back up above it. It broke, traded back down below it. So this also is not a bad area here to look for maybe taking some profit. Okay, now I got my profit and loss in here. Okay, for some reason I don't know, it's showing it in terms of points. Not sure why. That's fine. Maybe it's even better. But this is odd because it wasn't like that the other day. Anyway, so yeah. Now again, look what we've done in here. Now we've covered this the entire webinar, some of these concepts, and we put it into a bit of practice in here. Okay, so this is like watching the game here. And then you guys can go and practice your moves now. Understand the concepts of the moves, and then is this something that first off, do you like it? And because if you don't like it, if it doesn't resonate with you, you probably, what's the point then? If you hate it, like why would you? It's like, oh, you're gonna wake up and you're not gonna want to trade. It's like, oh, I hate that strategy. Well, find the one you like, and you're much more, you'll be more inclined to study it and be passionate about it, and go into depth about it and understand the nuances behind it. Okay, again, just like in the academy, guys, they're doing this all day long. All right, let me see on YouTube if I'm any comments. No, nothing. Okay, good. All right, guys, so as you can see, like some of these like look like, oh my god, like horrible positions, and yet we had our ideas and what we were looking for in here. And again, it may not have worked. Then we get stopped out, or we take our loss. Can I go over details for the NQ Trader Map Lite settings? Yeah, sure. All right, let me clear all the drawings in here, and I think you guys understand the concept of these ranges in here, and we can go into the micro ranges in here. Just a comment in here about looking at very, very small time frames and doing these demos, is these kinds of toxic moves can happen, and when that does happen, it, immediately we're going to be stopped out, right? So and NQ is more likely to do that than others, but that's the risk you take, and you have to know that. Anyway, let's get into the TraderMap Lite settings in here. What am I using? And again, TraderMap Lite will get rid of that bot that you guys see in here, and then I'm using the standard filter here. That's it. Okay, I'm also let's go into the heat map settings. So I right click in here and go to heat map settings, and I filtered it here. I filtered the upper and lower cutoff, 0 to infinity. Okay, so here, let me restore it here, and this is what it looks like. Okay, now you should see something similar in NASDAQ if you, let's put in let's put in a 1 hour time slice. It should look something similar now. If you're using a 1 hour of sliding data in here, from the left to the current market is 1 hour of data. Okay, and then I've gone the heat map settings and I've hit restore, and so that it should look very similar now, right? And if it's too much for you in the heat map, it's easy. Just go to the heat map settings. You can also go up here. It takes you to the same place, and then play around with them. If it's a little too much noise for you, that's fine. We can make it very, very stark here by raising the upper and lower cutoffs, and then this will kind of filter out some of that noise, and we'll look at more of that high liquidity that we're looking for. Okay, so let's see here. All right, so do I want to be a buyer in this little area here? It's a little late for that. Right. Let's see, if these buyers here and the passive buyers in here, if they traded, then let's see if we can get these aggressive buyers, the green dots in here, to move price up to here, these sellers up here at 9 and 10. Another thing, so we're going to look at a different, we won't talk too much about mention this kind of bigger range in here, although that is higher probability. I want to talk about a diagonal range, and I think this will be helpful for you guys as well, okay? Because it's all about the same ideas in here about value. What is it worth? Maybe this is too expensive in here for specific buyers, and they're not going to trade higher. In fact, they did just now. So we got some insight in here. So now our diagonal range is turning into a horizontal range. Okay, so now this is probably where we're going to find some sellers up here. We found supply, we traded into it, and we're getting our pullback. Where are we looking our pullback to go to? Well, this is not a bad little node right here, or maybe here. Okay, so we just got our move. Let's look for a little bit of buying to come back in, and we'll jump in. Okay, now this is a European close coming up too, so let's be careful about that. Oops, I hit that twice by accident. Okay, and all right, so now we're outside of that range, and we're looking to go back into the range. And then maybe up into here. And let me actually, I'm going to configure this to regular chart. Okay, so it's actually, you can see what happened. It's kind of a, we're still kind of in this diagonal a bit. It kind of traded outside, but it failed. Okay, so maybe we want to be a buyer to actually down at the bottom of the diagonal here. Let's move this up a little bit to about here. Okay, and let's match it up with liquidity. There we go. Okay. So, and now here, this is a good area to also take some profit up here, right? Because this is where it dropped from. All right, so now our diagonal strategy is totally bust. In fact, let's just take our final profit at the top of the range here, and we are out. We're flat. Traded into high liquidity here. We're at the top of a range, and that's it. Okay, we'll just we'll call it a day here. Thanks, Luis. Yep. Yeah, then you'll get something similar by playing around with the settings there. And you have to. All right, guys, over in YouTube, yeah, please hit the like button. You know, subscribe to the channel, but better yet, just come over to Discord. You know, you'll get access to the community, and you know, traders like Alois and Steven and others that are helping out in the chat there. They're over here in Discord, and many are in the Bookmap Academy as well. If you're interested in this Bookmap Academy, let me show you a little bit about it. So just go to bookmap.com and then click on the more button here, and you can go to Bookmap Academy here. Okay, and then you can read about it, what it's all about. You can get Bookmap for free in here. And in the meantime, if you are interested in trying Bookmap, well then, you know, this is the time. So we got our Black Friday deal going on. In fact, it's only one more day, and then 50% off and of data and Bookmap Global Plus for 3 months, which is a great deal. And then you've got if you don't like that, you've already got your own data and you want to try Bookmap for 1 month, then go with the 60% off here. Now this is a Cyber Monday, and this ends next week, so you've got more time on this one. So if you really want the data together with Bookmap, and you want the better deal here, the 50% off for 3 months, then go with the Black Friday. Okay, and then put it to use. We got our trading competition next week, and then once you become a Bookmap paid subscriber, you'll be able to partake in this competition, and then you'll get access for the competition for the MBO bundle, the stops and icebergs that we've been covering. Okay, and then we all next week, then we'll also have the Pro Trader webinars on this stops and icebergs and market by order data, so that you guys can learn and understand how to use them, put them to use in the competition, and also for your trading in general. All right, thanks for coming, everybody, and have a good weekend. Practice those moves. Thank you, Alan. I like the Michael Jordan there. Yeah, his brother Larry. There you go. That's it. And practice your moves. Don't. It's a great. This is my new analogy. I'm going with it. So anyway, have a great weekend, guys, and we'll catch up with you next week.